How's it going? It's Russell here, and there are some new rules for crypto holders and investors right here in Canada, and these rules could end up with you being blacklisted from your favorite exchange of choice, and it gets even more controversial than that because these new rules apply to you based on essentially whether you're rich or poor. So let's get right into it. If you've logged into any crypto exchange in Canada over the last week or so, you might have been greeted with a survey asking you a number of different things, identifying where your money's coming from, what your risk tolerance is, how much volatility you can handle in your assets, what your objectives are, along with some other more personal questions, along with like what your income is, how many assets or like how much money you have in your investments across all different assets. A lot of prying questions. Using this information, crypto exchanges now have to treat you differently based on how you responded to the survey, and in some cases that could mean even restricting your access to use the exchange. Let's take a look here at a statement from Newton, which is a regulated crypto exchange in Canada. Here they say that there are two outcomes of this questionnaire, the one we just talked about. If the results indicate that investing in crypto is appropriate for you, you will be able to use Newton's complete platform. But here's where it gets interesting. If the results suggest that investing in crypto is not appropriate for you, you will be restricted from funding your account or placing new buys. If this is the case and you are an existing user, your account functionality will be limited to sales of crypto assets and withdrawals, meaning no longer will you be able to use the platform to purchase crypto assets. But keep in mind, this isn't Newton's fault, and it's not any other exchange's fault either. They're being forced to ask you this information and treat you in this way as a result of what the OSC and the CSA are telling them. Those are the regulators, the Ontario Security Commission and the Canadian Securities Administrators. These are the regulatory bodies that give these exchanges rules, and it seems like there's new rules coming down the pipeline rather quickly these days. Now, if you do this survey and you're still able to use the crypto platform, they do have to treat you differently based on how wealthy you are, essentially splitting crypto investors up into three different categories. And this applies to anyone who is in the following provinces. We have Manitoba, New Brunswick, Newfoundland and Labrador, Nova Scotia, Ontario, PEI, the Northwest Territories, Nunavut, and Yukon. So if you're in any of those countries, you'll have additional buy limits applied to you based on how wealthy you are. And these are the three different wealth groups that you can be split up into. The first category is retail investor, then it goes to eligible investor, and then it goes to accredited investor. And based on which one of these categories you fall into, there are new buy limits applied to you when you're working inside of these exchanges. Now, the retail investor is anyone who doesn't fit into the other two, the eligible or accredited investor categories. And if we go over here to the OSC, Ontario Securities Commission page, we can find out what exactly is an eligible investor. Eligible investors are people who their net assets have exceeded $400,000 and their net income before taxes exceeds $75,000 in each of the two most recent calendar years, or 125 together with you and a spouse. So if you fall into those categories, making over $75,000 a year regularly or have assets of over $400,000, you would fit into that eligible investor category. And soon we'll go into exactly what the limits are for these different categories. But then the final category is for the wealthiest of the wealthy, and that is the accredited investor category. That's with assets exceeding $1 million. You can see here in the fine print here, or net income before taxes exceeding $200,000 in each of the two most recent years. So likely most people will fit into that retail investor category, and perhaps some into the eligible investor category as well. And based on these different categories that you fall into, like I said, you have different buy limits imposed on you now. And here's a chart that shows it to you. Retail investors are limited to $30,000 Canadian in net purchases of crypto. Eligible investors are limited to $100,000 per year, and accredited investors, well, they have no limits. You can't see it because it's behind me, but right here it says no limits. So most people in Canada will have a $30,000 limit on the amount of crypto that they can purchase in a year. However, if you sell crypto, you sort of regain that space. So if you buy $30,000 worth of crypto and then sell $10,000 of it, you can buy another $10,000 because you sort of have gone back under that $30,000 limit. But you may have noticed when we were on that previous chart that there are some exceptions to this. You can see here that regardless of if you're a retail investor, an eligible investor, or an accredited investor, you will have no buy limits on the Bitcoin, Ethereum, Litecoin, or Bitcoin Cash that you may want to purchase. But this is where we get into some murky waters and where some of the problems with this regulation that I have actually come to the forefront. The goal of these regulators, the Ontario Security Commission and the Canada Securities Administrators, is to make sure that investors, especially retail investors, aren't getting in over their heads, aren't going to invest in things that they don't have the risk tolerance for or an understanding of. And I think it's a good thing to have these types of disclaimers and warnings about the risks of investing in rather volatile assets like most digital assets are. But imposing these limits on some digital assets and not others is where I think things get odd, because they haven't really given us their criteria or any ideas on how they made the decisions of which assets would be limitless and which ones would be limited. It essentially gives us the image that the OSC and the CSA are sort of saying, okay, here are your safe digital assets, and here are the ones we don't really want you to touch that much. While it's definitely a good thing that there are some limitless assets, it would be way more helpful if they were able to sort of explain to us what the criteria was for selecting these assets and why some didn't quite make the cut. And another thing that confuses me is how easy it is to work around these regulations if you wanted to. My guess is that most exchanges don't have to share user data and user information, meaning people could have multiple accounts at multiple exchanges, and using that, they could bypass this $30,000 limit. And even if you only wanted to use one exchange to purchase your crypto, you could just buy a bunch of Ether and then use something like a decentralized exchange or a DEX like Uniswap here, and you can trade into any asset with any amount. This does require you to sort of secure your own private keys, and for that I recommend that you use a hardware wallet like a Ledger or a Trezor. You can find out more information about picking up a Ledger if you don't already have one in the description of this video. Although maybe this is kind of a filter that the regulators are okay with, because largely it's the more sophisticated or more experienced crypto investors that actually know how to manage their own private keys and use decentralized applications like Uniswap. All in all, I don't think that these regulations are necessarily an awful thing. We just need more clarity on how they're making these decisions and what would actually deem someone as unfit to trade cryptocurrency, causing them to be blacklisted from the exchange. Right now, we haven't really gotten any press releases from the OSC or the CSA, rather just the exchanges that are being forced to impose these regulations are having to explain to their users these new rules, while we haven't actually gotten any of the finer details from the regulators themselves, to the best of my knowledge. And we need this transparency even more because these changes are being made by the OSC and the CSA, which are regulators, meaning they don't actually have to get votes in the House of Commons to change these rules like we would have to with laws. They're able to just regulate and make these changes arbitrarily. And this is especially concerning because we don't elect the officials that actually manage these organizations. They're appointed. So I would like to see a little bit more transparency here on how these decisions are actually being made, because the public needs that transparency. But I'm curious what you think about all of this. Do you think that these changes are just fine and the limits are large enough anyways for most people that it's not going to be a problem? Or do you think that this sets some sort of precedent of more control from these regulatory bodies that you're not a fan of? Either way, let me know down in the description. I read every single comment and try to reply to as many as I possibly can. And if you haven't already done so, subscribe to the channel because I cover more information like this and other information that Canadians need to know about right here on the channel. But with all that said, thanks so much for watching, everybody. I really hope this video has helped you out at least a little bit, and I'll see you next time.